Hello, my fellow silver and gold stackers. Today, we're kicking off something very special, our silver giveaway. We're giving away 20 ounces of silver, and entering is simple. All you have to do is like this video, comment your favorite type of silver or your silver price predictions for 2026, and subscribe to the channel. That's it. Just like that, you'll be entered to win. At the end of January, we'll pick one lucky winner and we'll do a live broadcast to announce it. You could walk away with 20 ounces of silver. Last month, someone won 10 ounces, so it really is that easy. Now, on to our main segment. Welcome back to Wall Street Bullion, and before we dive in, please hit that like and subscribe button. It helps our channel grow tremendously. Today's guest is a longtime friend, Yvon Blachik, President and CEO of BMG Group. Welcome back, Yvon. Yvon, thank you. Glad to be here. Happy New Year. Host, Happy New Year to you as well. Yvon, your insights have been spot on in the past, and now we're entering a year full of uncertainty. Silver, gold, geopolitical tensions, central banks, and more. What's your take on the current state of the precious metals market? Yvon, this is a fantastic time to analyze. I don't call them predictions, really. It's analysis of the variables shaping our financial systems and geopolitical landscape. Let's start with Venezuela. I see it as an opportunity, not a crisis, historically and geopolitically. Understanding Venezuela requires knowing the post-colonial legacy of Latin America. Recent events have been catalysts for petrodollar dynamics, monetary policy concerns, and geopolitical fragmentation. Declining confidence in fiat currencies is becoming obvious globally. Host, gold rallied sharply recently, touching $4,400, drawing attention as a safe haven asset. Silver is hovering over $78, and platinum is just under $2,200. And if I recall correctly, Yvon, you've said gold could hit $5,000 an ounce? Yvon, that's correct. The events were predictable in a broader context. Venezuela has long been low-hanging fruit, with natural resource wealth, but political and economic decay. The internal factions and governance challenges, combined with poverty and infrastructure collapse, make it complex, but strategically important. Host, absolutely. Let's talk about Maduro. There's controversy around his birthplace and internal power dynamics, but the real story is the resource potential. Oil, gold, platinum, diamonds, and how long it will take for the US or other powers to realize that potential. Yvon? Exactly. Even with intervention, reviving Venezuela's oil production and economic stability is a multi-year process. It's a long-term strategic issue, not a quick fix. Host? Got it. And while Venezuela captures headlines, the underlying shift is happening with central banks and gold accumulation, reflecting concerns over the US dollar and fiat currencies. Yvon. Yes, BRICS countries and others are buying gold, building discrete reserves, and strengthening financial systems against instability. Gold remains a critical pillar for national financial security, and platinum plays an equally strategic role for military and industrial uses. We're diving deeper into the geopolitical factors impacting precious metals, starting with Venezuela and its strategic importance. Host, Yvon, the capture of President Nicolas Maduro over the weekend has everyone talking. How significant is this from a financial and geopolitical standpoint? Yvon, very significant, but not in the way most people think. This is geopolitical theater, a signal to the world about US influence without directly destabilizing the region further. Venezuela's internal decay is decades in the making. Corruption, poverty, fractured governance, and infrastructure collapse. Yet, the country has unmatched natural resources, the largest oil reserves in the world, massive gold deposits, platinum, and diamonds. Host, So, while headlines focus on the capture itself, the real story is the resources and strategic positioning, correct? Yvon. Exactly. Take oil, for example. Venezuela's reserves are over 300 billion barrels, but production is below 1% of global output because of nationalization, lack of investment, and infrastructure collapse. Any revival, even under US oversight, will take years. It's a long-term play. Same with gold. Reserves around the Orinoco are extensive and potentially easier to extract than oil. Host. And politically, the Maduro regime wasn't exactly stable internally, right? Yvon. Right. Maduro's personal history and his wife's influence reflect internal factional power. Even legally, Maduro's nationality was contested, claims he was born in Colombia, but the Venezuelan Supreme Tribunal recognized Caracas as his birthplace in 2016. The point is, Venezuela's internal instability amplifies the strategic implications of any foreign intervention. Host. Let's bring this back to precious metals. Gold and silver react strongly to these events. Yvon. Absolutely. Gold rallies because investors see political and financial instability. Silver follows, though with more volatility. Beyond market speculation, central banks and private investors alike are increasing holdings, anticipating further monetary uncertainty. Gold is the ultimate reserve asset. Platinum is critical for military and industrial purposes, especially for BRICS nations. Host. Speaking of BRICS, what's their role in all of this? Yvon. The BRICS countries, Russia, China, India, South Africa, Brazil, are actively hedging against US dollar dominance. They've been accumulating gold discreetly and setting up financial frameworks that reduce dependency on Western institutions. These moves are long-term security plays, not reactive. Host. And in practical terms, how does this affect day-to-day silver and gold investors? Yvon. It validates holding physical precious metals. Every political flashpoint, like Venezuela, reinforces the value of sound money. When fiat currencies lose trust or central banks act unpredictably, gold and silver retain intrinsic value. Host. Got it. Let's touch on other geopolitical signals. The US recently intercepted a Russian oil tanker. What does that tell us? Yvon. On the surface, it's minor, a largely empty tanker. But symbolically, it sends signals to Russia, China, and the world about US naval reach and influence. It's more theater than strategy, yet it reflects the erosion of trust and stability in global finance, which ultimately feeds into precious metals' role as a hedge. Host. So, we're looking at a mix of political theater and long-term strategic positioning, and gold and silver benefit from both. Yvon. Exactly. The takeaway is simple. Precious metals are more than investments. They are insurance against global uncertainty. Geopolitical events, whether Venezuela, sanctions, or BRICS maneuvers, are all reinforcing the bullish thesis for gold and silver. We're zooming out to look at China, Greenland, and broader global strategy, and how these geopolitical moves impact gold and silver. Host. Yvon. Earlier we discussed Venezuela and BRICS. Let's pivot to China. How strategic is their positioning globally right now? Yvon. Extremely strategic. China is effectively a resource-hungry powerhouse. They lack sufficient domestic resources to meet their industrial and economic needs, so they secure them wherever possible. Venezuela, Russia, and other resource-rich nations become natural partners. The focus is long-term access to energy, precious metals, and strategic commodities, not short-term profits. Host. And what about Greenland? Headlines have suggested the US wants influence there. How does this tie into global precious metals and security? Yvon. Greenland is a strategic Arctic foothold. Historically, Denmark controlled it, but the US has long-term interests, citing national security. The legal basis stems from early 20th century treaties, including the US purchase of the Virgin Islands. While Europe may grumble, they cannot realistically intervene, so the US strengthens its Arctic influence. Host, is this purely military, or does it have economic implications too? Yvon, both. The Arctic contains rare earths and other strategic minerals, critical for high-tech manufacturing and defense. Greenland is also a geopolitical chess piece, giving the US leverage in global negotiations and an early warning position for Arctic developments. Host, how does all of this influence gold and silver markets? Yvon, it reinforces their value as a hedge. Every geopolitical maneuver, be it Venezuela, China's resource deals, or Arctic strategy, signals systemic uncertainty. Investors gravitate toward assets that cannot be created or printed, namely gold and silver. Central banks understand this, and private investors are following suit. Host, let's talk numbers. How are BRICS and other countries accumulating gold? Yvon, quietly but aggressively. They buy through discrete channels, not the open market, to avoid price shocks. This accumulation reflects a long-term plan to reduce reliance on the US dollar. Gold isn't just a financial instrument, it's geopolitical insurance, ensuring countries can operate independently if fiat systems weaken. Host, and for silver? Yvon, silver is more volatile but follows gold's broader trend. Physical silver supply is limited, and large-scale accumulation by private investors, billionaires, and strategic buyers is putting pressure on availability. Each geopolitical flashpoint, Venezuela, sanctions, Arctic moves, creates buying opportunities. Host, speaking of the US, how are European nations reacting to these global shifts? Yvon, Europe's responses are cautious and muted. They rely heavily on US support for security and energy. Most criticism is legalistic, without teeth, because Europe cannot act independently without risking internal economic stability. Essentially, they are constrained, leaving the US and BRICS nations to shape the global financial order. Host. So, the takeaway for stackers is, Yvon, hold physical metals, especially silver and gold. Geopolitical uncertainty is not a short-term event. It's a long-term trend. The combination of internal instability in resource-rich nations, US military influence, BRICS accumulation, and Arctic strategy all point to sustained demand for precious metals. Host. And platinum? Yvon. Platinum remains critical for military and industrial applications, especially jet fuel, catalysts, and explosives. Russia and South Africa dominate production, which ties into geopolitical leverage, reinforcing the strategic importance of owning and tracking precious metals. We focus on how these global moves translate to opportunities for silver stackers and investors. We'll break down what's happening in the markets, what it means for prices, and how you can position yourself. Host. Yvon, we've discussed Venezuela, China, Greenland, and BRICS. How do these geopolitical events affect silver pricing directly? Yvon, silver is uniquely positioned. Unlike gold, which is mainly a monetary hedge, silver has dual roles, industrial and monetary. Industrial demand comes from tech, renewable energy, and manufacturing. Monetary demand comes from investors seeking a tangible hedge against fiat currency risks. Every geopolitical disruption, whether sanctions, conflicts, or strategic alliances, adds a premium to silver, especially physical silver. Host. And what about market volatility? Prices can swing wildly in a day. Yvon. True. Volatility is part of the opportunity. Physical silver supply is constrained, and large institutional buyers, hedge funds, or high net worth individuals can create sharp short-term swings. But the long-term trend is bullish if you understand the underlying fundamentals: supply limitations, central bank accumulation of gold, and the global appetite for precious metals as a safe store of value. Host, let's talk strategy for stackers. What should viewers do in the current environment? Yvonne, first, buy on dips. Market corrections are temporary. Second, focus on quality and form of silver. Uncirculated dimes, bars, or rounds are easier to store and trade. Third, diversify your holdings. Don't just hold silver. Include gold and platinum to hedge against different risks. Host, how about physical versus ETFs or paper silver? Yvonne, physical silver is non-negotiable for long-term stackers. ETFs and futures are useful for speculation, but ownership of physical metal protects against systemic risk. When geopolitical uncertainty spikes, paper assets can fail, but physical metals retain intrinsic value. Host, and in terms of timing, with 2026 just starting, what should stackers watch for? Yvonne, watch geopolitical flashpoints, central bank moves, and major market interventions. Silver's corrective dips are buying opportunities, not panic signals. Supply constraints are real, especially with large investors hoarding, so each dip is a chance to add to your stack. Host, any specific sectors or forms of silver that are more strategic right now? Yvonne, yes. Mercury dimes, Liberty Head dimes, 90% silver coins, and proof sets are excellent. They allow incremental stacking and provide a way to measure your progress toward a tangible portfolio goal. Bars are efficient for storage and bulk accumulation. Host, so we're essentially saying stay disciplined, hold physical, and think long-term. Yvonne, absolutely. Think decades, not days. The silver bull run isn't over, even with daily volatility. Every major geopolitical or financial event reinforces the importance of tangible assets, and silver is a key pillar in that strategy. Host, let's close this part with one last thought for stackers. Yvonne, remember, geopolitical uncertainty is rising, fiat currencies are under pressure, and physical supply is limited. Your stack is your insurance, your hedge, and your message that you value sound money. Buy wisely, hold steadfastly, and don't get caught up in the noise of daily price swings. Host, perfect. In the final part, we'll wrap up with the silver giveaway details, key takeaways, and a final message for our community. Host, all right everyone, we've covered a lot today, from Venezuela to China, BRICS, and Greenland, and how it all impacts silver, gold, and platinum. Before we close, let's talk giveaway details and key takeaways for silver stackers. First, the silver giveaway. We're giving away 20 ounces of silver. It's super easy to enter. All you have to do is like this video, comment either your favorite type of silver or your silver price predictions for 2026. Subscribe to the channel. That's it. One lucky winner will be chosen at the end of January during a live broadcast, and you'll get 20 ounces of silver. Last month, someone won 10 ounces, so you could double that this time. Now, on to the key takeaways from today's discussion. Silver remains a critical hedge. Geopolitical uncertainty, global economic stress, and monetary policy shifts are driving demand for tangible assets. Even with volatility, silver is a long-term store of value. Physical silver is king. While ETFs and futures are useful, holding actual coins, dimes, rounds, and bars ensures you're protected against system risks. The more you stack now, the stronger your position. Global events reinforce precious metals. Actions in Venezuela, sanctions on Russia, China's strategic positioning, and post-colonial challenges in Latin America all add a premium to silver and gold. Every geopolitical flashpoint strengthens the argument for holding physical metals. Central banks are major players. Since 2008, central banks worldwide have been accumulating gold aggressively. Silver benefits indirectly because monetary metals are increasingly scarce and investor demand grows. Volatility is opportunity. Don't fear dips. Corrective moves are chances to buy more at favorable prices. Timing the market perfectly isn't necessary. Consistent accumulation over time is what counts. Host. Personally, I've been adding to my stack as well. Recently, I picked up uncirculated mercury dimes, proof silver rosies, and more. These aren't just collectibles. They're a practical way to build wealth in a turbulent world. Every coin you add reinforces your financial independence and sends a message. You understand the value of sound money. Host? To wrap things up, remember this. Silver's bull run is far from over. Daily price swings are noise for long-term stackers. The combination of limited physical supply, growing geopolitical uncertainty, and strategic central bank activity makes this a historic period for silver. Stay disciplined, keep stacking, and focus on decades-long horizons rather than day-to-day fluctuations. Finally, thank you to each and every one of you in our community. Your support, comments, and engagement make this channel possible. Please like, share, comment, and subscribe to keep our mission going, helping people understand, accumulate, and protect their wealth through precious metals. Host. And remember, enter the giveaway. 20 ounces of silver could be yours simply by liking, commenting your silver favorites or 2026 predictions, and subscribing. We'll announce the winner live at the end of January. Thanks again for watching. Stay safe, stay informed, and most importantly, keep stacking your silver and gold. Sound money isn't just a strategy, it's a legacy. Host. That's it for today. This is Wall Street Bullion signing off. See you in the next video.